Hello everybody, welcome to this week's market outlook, market recap, look ahead to what's going on for next week. Just to explain how these things work, we normally do them every Friday and we have a quick catch up with what's been happening in markets this week. Clearly lots of volatility still going on, and a look ahead to the major events for next week very briefly. So we'll spend most of today on the trading platform. For some reason it doesn't look like it started for me. I think there's a bit of a delay. If you can just confirm that everything's working at your end, and I'll carry on. I'm watching it on another screen here and it's about 30 seconds behind. Right, but I think it's there. Okay, what are we doing? Completely forgot. Lost my track. Let's just do the risk warning first of all. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76.25% of all retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Okay, let's go. So have a quick look at next week. I mean, there's loads going on at the moment. It's been really busy for news this week with the Fed announcement, and next week it continues. So Monday we've got EU GDP, so European economic performance. Be interesting. Tuesday, Australian interest rates. Wednesday, EU CPI. That's inflation, and clearly inflation is a massive deal at the moment. It's the biggest theme, I think, for markets at the moment, inflation. Then closely tied to inflation, of course, Thursday, UK and EU interest rate decisions. So plenty of volatility potentially over Wednesday and Thursday. And Friday is the big one for the week. It's the non-farm payrolls. So that's US unemployment numbers. It does feel like it's getting somewhat dwarfed at the moment by all the concerns about inflation and everything. But yeah, that's next Friday. So next Friday we'll be doing the live stream an hour after the payrolls came out. So that's that. Lots to watch next week. To find out more about the company, go to Capital.com. Any questions after today, drop me an email, david.jones@capital.com. You can follow me on Twitter @JonesTheMarkets. You can find out more about me and my trading approach. That's JonesTheMarkets.com. And follow Capital.com on YouTube, Twitter and Facebook. You're watching on our YouTube channel now. Clearly, if you subscribe, you get notified when we upload new videos. We normally put 3 market videos up a week, and we've got some sort of educational tutorial stuff going up, I think, over the next week or so. So if you're not subscribed to the channel, you should do. Right, let's take a look, shall we? Let's get into the market. So this is the bit where we look at the markets, see what's going on, look at the major markets. Then after that, I'll go into the questions and look at any stuff that you want looking at. But let's start things off with stock markets. The volatility continues. Crazy markets, what can you say? We'll start off with the S&P 500. I did do a video on the S&P 500 this week, and I bought it at 43.53. You can see it there on the chart. I'm losing about 67 quid on that trade at the moment, and I've got a short Nasdaq trade on that's still going, that's up about 500 quid. So overall from stock markets, doing okay, but these are very difficult markets to call, I think. And I think it's really interesting because, really, as it was last week, if we look at the trading over the last week, these are daily candles. So that was Monday, wasn't it? That was Monday the 24th. So something of a bizarre day on Monday. I mean, the market absolutely fell off a cliff. This is the S&P. Moved to its lowest since, briefly took out that low, moved to its lowest since June of last year. So we saw a 6-month low on the S&P this week. And then you can see, look at the recovery into the close. So it pushes up and closes there. So 200 points higher than those lows, 5% bounce back. So massive volatility. And I think, when did I do the video? I did the video on Tuesday on the S&P, maybe on Monday, I don't know. But I put my stop loss below that low because I take the view, and I still take the view for the S&P. If we break below that low, I think the risk is for another lurch lower from here. So even though there's been absolutely loads of volatility this week, I don't think we've got any more resolution about where it might go next after the move on Monday. You know, if we looked at the trend, I've picked up on it from the May 2020 lows. You know, it's definitely pushed below the trend line. It's taken out support here from December. It has blipped intraday below the support from September there, and it's also had a quick look below the June low. So it is still a nervous market. I think I said that, you know, for me, like a lot of people here in the UK, you might have ISAs and stuff like that and pensions, and a lot of mine is in S&P trackers. So I follow the S&P pretty closely. And I dumped about a third of it a couple of weeks ago, I think I said, and I'm just waiting to see where it goes next to try and decide, is this a great buying opportunity, or is it the start of a downtrend? You know, so it's at a really critical point. I think it's a hard one to call, but I think it's a really interesting market. You don't need to keep, just a quick note, you don't need to keep spamming the chat to look at markets. If someone's mentioned it already, I will get to it. So don't just keep spamming it. And crude oil is one of the markets we look at anyway, so just be patient. So stock market's really interesting, but I don't know. If we break 4,200, then bang, down we go again, I think. Perhaps back down initially to these May lows ahead of 4,000. Let's see what happens today. Is it going to hold, or is it going to go crashing through? Let's take a look at the Nasdaq. Nasdaq 100. So this is the one I've got the short trade on. I mean, this is down 14% this month. I wrote something this morning and looked at the numbers. I mean, that is a phenomenal move. And you can see the size of the move. You know, it touched 16.5 early Jan, and we've been as low as, 13.8 or so. And it's the same setup with the Nasdaq. I think arguably the Nasdaq looks more bearish than the S&P at the moment. You know, the Nasdaq hit a fresh all-time high in November, and it hasn't since then. The S&P hit a fresh all-time high in January of this year. So it was a bit stronger. The Nasdaq looks weaker, and it's the whole theme at the moment. I put on Twitter, I think it was earlier in the week, it's a really interesting chart comparing ARK Innovation, very well-known US exchange-traded fund led by Cathie Wood, that, you know, was a big holder in Tesla, did really well on the way up. ARK Innovation, there we go. Absolute real favourite with US investors, and you can see why. You know, March 2020 was about $34, was $160 Feb last year, and here we are at 65. But there was a chart from the FT the weekend that showed ARK's performance over the last couple of years versus Warren Buffett's performance, Berkshire Hathaway. You know, invest in sensible businesses, not really chasing these go-getting stocks, and they were just about starting to cross over. So ARK has massively outperformed, and because of it, you know, clearly these tech stocks, the growth stocks, been really hit the last few months, they're crossing over again. So and that I think is the theme at the moment. You know, again, going back to the whole ISA thing, we looked at this last week, British American Tobacco, and I said, I know that one because I've got it in my ISA. A lot of these, you know, sort of boring dividend yieldy stocks have done well in January. I mean, this one is up about 10-12%, I think, in January, because of an ongoing switch away from the go-getting tech stocks into perhaps a more defensive mode. But yeah, there we go. So Nasdaq still under pressure, I think. And again, for the Nasdaq, for me, it's that level down there. It's that low again from Monday, the low at 13.7. If we start trading below there, I think the risk is for a bigger sell-off from where we are now. because this is classic sort of price action trading. When you look at a market this way, look at what happened on Monday. Basically, the market rejected prices down here, yeah, so traded down here and got bought up quite sharply into the second half of the day. And if we expect it, okay, if the market's rejecting prices, then it should move away. But what we're seeing over the last few days is the market getting back in and accepting those prices it was rejecting on Monday. And that acceptance can mean, well, actually, perhaps those prices aren't so cheap. And if those prices aren't so cheap, maybe they're too expensive and maybe the market goes lower. Who knows? Let's see what happens. So, yeah, pretty precariously poised at the end of the week. Try saying that after a few gin and tonics. Right, Ftse 100. Ftse, again, has not performed as badly because, as we know, with the Ftse 100, very different makeup, definitely to the Nasdaq, and still quite a different makeup to the S&P. So the Ftse 100, has more defensive-y type stocks, so has underperformed on the way up. Hasn't gained as much off the March 2020 lows as other markets, and is not getting hit as hard on the way back down. The Ftse is only, what's it doing for the month? The Ftse looks like pretty flat for the month. So the Ftse ended last year at 7,400, and here we are at 7,450. Nasdaq's down 14% for the month. So you can see again this shift between stuff, the go-getters and the more traditional stocks. So the trend for the Ftse still up. If we take a look at the DAX, the DAX is a bit of a mishmash of safer companies and tech. Big level for the DAX down at 14.8. Kept on Monday again. Monday was a big day for stock markets this week. Came down to it on Monday, 14.8, the lows from October. Again, I think if we start trading below there, we do have potentially a not a good setup for the months ahead. Let's see. And then finally the Nikkei. I'm guessing it's going to be near the lows. Yes, near the lows. Actually breaking the lows. That's interesting. So the Nikkei, where's the thing gone? So the lows from the middle of the year or August last year, down around 26.8, 27,000. The Nikkei's pushing through that. So again, still looks a bit weak. Breaking big levels. So these stock markets looking very different to how they looked 2 or 3 months ago, I think, at the moment. And really, for me, they are still the main markets I watch during the day. So that's stock markets. Let's take a look at oil and natural gas. I do have is there an oil trade on? I've got 2 oil trades in this account. Let's take a look at those actually, because oil's hit multi-year highs again today. And I've also got an oil trade on for my own account as well, which is good. So oil, there's an oil trade running from the 6th of December. So bought in at 68. The market is at 87 today. That's a great trade, that is, isn't it? Up $20 on oil. And 21st of January trade, I think that was an order that got filled in the early hours of the morning at 83. And that's up about 300 quid. So good trades there, even if I do say so myself. But clearly, because the trend has been up, I bought it the other day for me, I think about a week ago maybe it was I bought it on this dip. I think I'm in from about 83 for my own account. But here we are again. We're here, I think, very briefly today, just about. So yesterday the high was 87.99, today 88.10. So the high in oil, we are back to levels not seen since October 2014. So 7-year plus highs again on oil. And what can you say? The trend is up on oil. I'm sure plenty of fingers have been burnt trying to call the top in oil. I'm just looking at market info. Look at this. I knew it. The trend is up. Trend is clearly up in oil. And we have this market sentiment box here. And this shows what percentage of clients who have trades open on oil are long or short. And you can see 45% of people who have a trade on with us on oil are short. So they are the wrong side of that move at the moment. Let's see how it works out. But clearly the big trend is up for oil off the April lows. If we zoom in on perhaps since November last year, let's flip it over to an hourly. So if I pick up on that, you know, the trend is up again. So for me, you know, I would still be, and I'm happy to stay long oil, I'd still be a buyer of dips. You know, I think it's only if we start losing, let's say $81 for oil, the lows from mid-January, does it look like this latest bit of the trend is in trouble. So there you go. So it's still up for me, still a strong market. Is it going to hit $100 a barrel? Who knows? I don't think we've got any obvious barriers on the way up from here. I mean, I can't quite believe we're talking about $100 a barrel for oil, but you know, it is only here. You know, it's not a million miles away from where it's trading now. I mean, just this year, the price of oil has moved up in January $12. So it's only got to repeat that again to get to 100, which does seem quite incredible considering the cash price was down around 11 not even 2 years ago. And natural gas, which I'm very happy about because I've got a trade on natural gas. I think there's a couple of trades in this account as well, and I've got a trade on my own account. Natural gas has gone a bit loopy the last couple of days, which it does. You know, natural gas is a funny old market at the best of times. I'm guessing, let me have a quick look. I'm guessing it's all Russia, Ukraine, pipeline related. Let me have a quick look. I was having a quick look on the Ftse. Oil and gas, new Russian gas projects, sanctions. Don't know. I can't see anything on there. But anyway, the reason I bought in, I think I did a natural gas video this week or last week. There's definitely one on the channel, and I bought in because of the trends. You know, it was a fantastic market last year. Natural gas from about April of last year for me, after being a dreadful market the year before, where I'd always be the wrong side of the trade. But last year, great run, got up to the highs, $6.50 highs last year in October, pretty much halved, not quite halved, but you know, dropped back to 3.5 in December, and we were just bobbling around this trend line, and we had support from back here in natural gas at 350. So I did the trade. If we have a look on this account, a couple of trades, one from the 13th of December at 395 and one here at 4 from the 19th of January. So they've done all right. Let's see where it goes. I mean, natural gas is, you know, it's a funny old one because it can reverse really quickly. We could be back at 4 by Tuesday with natural gas, but it's interesting that we've seen this move and a breakout. Personally, for me, I'm looking in my trades for at least a move to 5.5 for natural gas, which is another, well, it's another 20% actually from where we are now. I just seen somebody said in the comments the February contract was up 37% overnight, along with winter storm in the US. Thanks for that. So again, clearly, you know, it's a weather-driven market a lot of the time, natural gas. So that's one reason why we're seeing it higher. It's because of winter storms in the US. So yeah, energy markets still strong. What should we look at next? Let's look at gold and silver. I think it's a gold video on the channel from yesterday. I really struggled to find much to say about gold. I've got a couple of trades running. You can see them here. One's quite underwater. One's slightly up. What can you say? I would say anybody who's hanging on to gold in the hope it's going to explode higher this year because of inflation, I would be worried if that was my position. And I've bought it because of the trend. But if I was hoping that gold was going to have a brilliant year because of inflation, it's not doing it. Look at it. We know that inflation is high. Gold is not going up. So gold has, what is it for the year? It's down for the year. It's only down $40 for the year. For me, that trend is still up. So I'd still be a buyer on weakness for gold. You know, we've got a lot of support. Pretty much bang on the lows today is the trend line in at 1780. Then we got this low from December at 1750. So 1750 to 1780 has been good support for gold. So if it stopped going down on Monday and I wanted to buy it, I think that could be a good buy. But it's still quite a boring market. You know, we are not seeing any massive explosion in the gold price. I wonder if it ends up being another pretty boring year for gold. We'll see how it pans out. Got a couple of trades on at the moment. Stops in place. We'll see what happens. And silver. I thought silver was going to have a bit of a moment, but it's disappointed yet again. The price of silver promises so much and delivers so little. So we had this run up, and I did have, I think I've come out of the trades. I did have some trades on silver, but pushed up to 24.60, third week of Jan. Good move. It's dumped right down again, and it's all about dollar strength. We'll look at the US dollar next, but still in that big sideways range. It was the worst market for me on this account last year, silver, because whenever I put a trade on, it just couldn't get any momentum. So there you go. So for me, what's interesting next week in silver to watch to see how it performs. We've seen massive support for silver at $21.50. So let's see what happens. See if we see the buyers come back in, but really can't catch momentum. I wouldn't believe banks attacking gold and banks short oil. I really don't believe those sort of conspiracy theories, but okay. Right, what are we going to look at next? The dollar. This is why gold and silver, one of the reasons why gold and silver is not doing so well, because we are seeing dollar strength. I've often said, if there's a market you want to look at, it's an FX market. This is really an interesting market to watch, the dollar index, rather than watching a whole load of other things. We just looked at WTI, we just looked at oil. Dollar index is a really interesting one to look at. And, because we had the Fed decision this week, no surprises, no changes this week. But, they said that I think in March is when rates are going to start coming up. We've seen a rally in the US dollar. So this is the dollar index. So just today pushed up to its best levels since, we need to go back to July 2020. So we had an 18-month high in the dollar index. Oh, I see, the commitment of traders report, got you. But that won't be the whole market there, the commitment, because it's just futures, isn't it? So, okay, so you're saying professionals are short oil on futures on the commitment of traders. I could believe that. On gold, I think a lot of gold trading goes on outside of the futures, but I'll have a look at that because it's always an interesting one to look at. But back to the dollar index. So we're up here at these highest levels since July 2020. It's sort of buy the dip for me. I think one of the oldest trades I've got in my own trading account is on the dollar index because I've been watching this trend up. Yes, you'll be able to watch a repeat of this later when we finish the live stream. Because I remember talking about the dollar last year, the dollar index, when we were doing these things last year, and wondering if 2021 would be the year of the great dollar comeback. It took a while to turn out that way. I bought in here, and then had to wait till June till it started really moving. But that dollar index has really moved higher. So for me, I've got a trade on at the moment. I'd like to be a buyer of weakness. Perhaps it's been a bit overdone this week, who knows, but I'd still be a buyer of weakness for the US dollar. And, clearly a stronger US dollar puts pressure on gold and silver, and so that's one of the reasons we're seeing it perform as it is. And it really is hammering everything else. Euro dollar. So today or yesterday on euro against the US dollar, the euro traded to its lowest levels since May 2020. So again, if I need to adjust that trend line, for me, that trend is still down on the euro against the dollar. So that looks pretty weak. Again, perhaps it's been a bit overdone in the short term. But for me, any strength in the euro looks like a buying opportunity, a selling opportunity, sorry. Same for the pound. I think I said last week I was looking to get short the pound and was hoping for a bit of a rally. This week hasn't happened. It's fallen away. I was hoping we get a bit of a push back to 37 and it turned down again, but it hasn't happened in the pound. So for me, still looks, it's not as weak as the euro against the dollar, but it's still pretty weak, pound against dollar. For me, that trend is still down, even though it's had a bit of a look through it. I would still be tempted to be going short the pound on weakness. It has been a crazy month in all sorts of markets. I found it a really hard month to trade this month. Most of the stuff I do for my own trading is very similar to the trading approach in this account that I show on the videos we do. It's more medium-term stuff, trying to catch the big swing, all of that. But with so many trends changing, particularly in stock markets over the last couple of months. It's been a tough month. My shorter term stuff has done much better in this month because the markets have just been so volatile. But normally for me, it's the medium term stuff that does better. And the cryptos, the poor old cryptos, all the hodlers seeing all their lovely money disappear. I mean, it's been a horrible time in cryptocurrencies, isn't it? You know, since November, the November highs in Bitcoin, 68,000, and the market traded, is it Monday again? Traded down to 33,000 on Monday. So halved from the November highs. For me, I'm still waiting for a buying opportunity. As much as I think crypto is an absolute nutcase market and teaches people really bad habits, because I think, it's brought a whole load of new traders in the last couple of years. They get taught that if they hang on and the market halves, it'll be okay because the market will come back. So I think it's a whole awful market for lots of reasons, crypto, mainly because it teaches newbies bad habits. But I do wonder if we're going to see it start to base out a bit here. So that's what I'm waiting for. We've got this massive old support. I mean, it's major, this support from January last year, down at 28,000. June last year, down at 28 to 30,000. Let's see what happens. So for me, I'd be interested if we saw a bit more strength and a retest of being a buyer. But for me, that trend is still down in Bitcoin. So I'm not doing anything just yet. And if you look at Ethereum, it's the same story for Ethereum, really. It's actually, let me get rid of that. It's slipped below whatever that low was from September. We've got big support pretty major support for Ethereum coming up around 1600, 1700. But that trend off those highs is still down, So let's see what happens. So loads to watch. For me, the important stuff to watch is still stocks. So S&P, I saw someone ask for the S&P. It was the first thing we covered, the S&P. So you can watch that in the recording. Still looks pretty weak today, massively volatile still. It's in this shorter term level, round at 42.80, has held the last couple of days. But we're not exactly seeing the market moving away from these lows, are we? Keeps getting drawn back. So again, quite a nervous market in stock markets, but an interesting one to watch for the rest of the day. Oil is interesting because we are up at new 7-year highs again today. Lovely, jubbly, not so good. Of course, not so good for inflation, of course. We've got oil racing away. That's not going to help any country's inflation, but still a really strong market. So I think that's interesting to watch. And the dollar index. If there are only 3 markets I could watch at the moment, it'd probably be the S&P, the oil price, and the dollar index. So for me, it'd be nice to see a bit of weakness next week in the dollar index and see if we get a buying opportunity. But let's see. So what I'll do, I'll just do a quick recap of the contacts, then we'll jump into the questions and see what the questions are. So to find out more about the company, then of course it is Capital.com. To drop me an email if you've got any questions, david.jones@capital.com. To follow me on Twitter, I'm at Jones the Markets on Twitter. To find out more about my trading approach and my trading course, it's jonesthemarkets.com, I think. And follow Capital.com, obviously, on YouTube, Twitter, and Facebook. Right, let's jump into the questions. So, what have we got first of all? Copper. Let's have a look at copper. Copper, the other week, did look like it was getting a move on, and then it hasn't. But for me, I do have a trade on copper that I've been running for some time. I'm sort of giving this trend that it broke down out of in August a second chance, but I'd have to say it's not really going anywhere, copper, is it? It sort of, where was it? Middle of January. It looked like, we're going to have a bit of a run back up to 4.8 again, but it hasn't happened. So for me, I'd be a buyer on dips, but it's a bit like gold at the moment. It's just a little bit boring. Loads of support from just below 4 through to 410, 420, but just no real excitement. So I'm struggling. I've got a trade on copper at the moment, but it's just not really doing anything. Just looks a little bit boring to me. Tesla. Let's have a look at Tesla. Tesla's always interesting. I mean, it's they came out with earnings this weak, didn't they? They beat expectations on earnings, but they did say that because of supply chain constraints, there won't be any new models coming out this year from Tesla. They're going to stick with their existing range. I think there's lots of Americans waiting for this Cybertruck thing that Tesla have announced, but that's not coming out this year. But it's interesting. Here's the trend in Tesla going back to September 2020. We're bang on the trend line. So for me, if it's going to bounce from anywhere, then we're pretty much here. You know, we had good support from September last year in Tesla at $700. So for me, it's a really interesting one to watch. The only problem is, and it's a major problem, if this rout in tech stocks continue, so if we see the Nasdaq continue to fall, I can't really see Tesla being immune from that, you know, so we'd expect the price of Tesla to get hit as well. But it is interesting to watch down here. Let's come back to it next week and see if it's trying to build a base down here. So someone's asking about sterling New Zealand dollar. Sterling New Zealand dollar. Oh, look at that. The pound is soaring away, isn't it? That's quite a big breakout, isn't it, for the pound against the New Zealand dollar? So the New Zealand dollar must be very weak because the pound clearly is not strong against the US dollar. It's a big breakout. That looks really bullish to me. So for me, I'd be looking to be a buyer. I'd buy a dip if there was a dip. And the risk is, of course, when you wait for a dip, the dip doesn't happen. But I think that's interesting. So for me, I'd be in the next week, if it slipped back towards 202, be a buying opportunity for me anyway, with a stop perhaps the other side of 199 or something like that. So I think that's one of the very rare bullish charts, apart from oil actually, that we've looked at today, and the dollar index. So yeah, big break in sterling against the New Zealand dollar. What else could we looked at? Natural gas, Boeing. When are their earnings out? I don't know when their earnings are out, but let's have a look at the chart. Boeing, is it not coming up? Let's have a look at it. So this is another interesting one. It's fallen out of that trend off the March lows. So it fell out of that this year, or last year, sorry. And we are now trading pretty much near the lows for late December last year. I'd be tempted to be thinking about being a buyer, but I'd want to see it strong first of all. It's still pretty weak, isn't it? So for me, it's interesting if we see it start to build a base, because it could be interesting, like a buy with a tight stop down here. But at the moment, for me, it's still pretty weak. But you know, the fact it's trading back to these lows in December, and we did see it was a big rally off those lows. It was a $50 move off those lows, which is what, 25% move off those lows. Let's see what happens. But personally, I wouldn't buy it today. I'd want to see it try and stabilise. What's your thoughts on the volatility chart? I do look at this. I never trade it. I think it's interesting to watch, and it shows you it's the VIX. So it's often referred to as the fear index. It shows you implied volatility for S&P options, what they're doing. So it shows you really how much nerves there are in the market, and not surprising, it has spiked higher during January. Historically, these spikes haven't lasted that long. You know, it's perhaps hanging around a bit more now, not surprisingly, because the stock market's getting hit so much. And we had a massive run up in volatility, obviously, in March 2020, when markets fell off a cliff. But you can see the volatility hasn't lasted long historically. Let's see what happens now. I don't trade it because I just think it's, for me, it's just a hard one to trade. But clearly, if markets tank, then that VIX you'd expect is going to jump higher. What do you think about NIO and Alibaba? So NIO is the Chinese electric company stock. I did trade these this year. I did look at the chart this week. I mean, that chart looks absolutely horrible to me, to be perfectly honest. So yeah, it's really weak, isn't it? Where's it? I mean, it's gone from almost $45 in November to below $20 today. You know, it still looks weak to me. So for me, I'd be selling into strength. I wouldn't be looking for a buying opportunity just yet in NIO. And Alibaba, we look at this a few times, don't we? Is that downtrend still there? Yes, it is. Look at that. So the downtrend in Alibaba that's been going since October 2020. So we're it's that a year and 3 months into that. I suppose if you absolutely had to buy it, you could take a punt on it holding above the December low. The December low is 108.70. But for me, you know, that trend is definitely still down, and any strength has just been an opportunity to sell at a better level. So let's see. What's your opinion on euro against the Hungarian forint? I think we have looked at this before. I seem to remember there being a good trend in this, but maybe I was wrong. There was a good trend. That looks like some dodgy price data in there. So there was a good trend. That was a good trade, coming back to those lows. For me, it's a bit sort of scrappy at the moment. I suppose an aggressive trade would be a buyer now at 358, and I would put my stop underneath the mid-Jan low. That could be an aggressive trade, looking to see does it run back up towards 370. But it's a bit scrappy, and I think we've got some duff prices in there at the moment. So we did that. Indian indices. I don't think we do any Indian indices, but let me have a look. Nifty 50. We do a Nifty 50 ETF, but we don't have that much data, and it just looks a bit patchy. So I can't, unfortunately, add much to that. Can we have a look at Gilead? Gilead. I'm sure this is another one that had a good trend. What do they do? I can't remember what they do. Biopharma. Okay. I would. It's a bit of a weird one, isn't it? I would be tempted to think about being a buyer, but not today. I think. I mean, for me, it's a bit sideways, isn't it? Over the last 12 months, okay, it's sort of nudged higher. It's a little bit sideways. On the RSI, it's pretty oversold if you believe RSIs. We are seeing it have a go at trying to rally today, which is not bad considering we've got a falling stock market. So for me, if I had to do a trade, or should we do one? We haven't done a trade today. I'd be a buyer with a stop loss underneath 64. So let's do that. Let's buy those and see if it manages to hold here. And if markets recover, we could see a bit of a bounce up. If markets fall off a cliff, I don't really think it'd be immune to it. But how many can we buy? I normally risk 100 quid on these live stream trades. So we're going to buy 35 at 67.47 or thereabouts with a stop at 63.50. So underneath the lows. Let's buy that. So let's see if it manages to stage some sort of rally from here. So because 64 was a big level in late October. So let's see what happens. What else have we got? So we looked at Tesla. Novavax. Sorry, my questions box is jumping around. Novavax. What do they do? I'm guessing it's some sort of biopharma-y stuff. Chart can't be displayed. What's going on? Hold on a sec. Let's just do a quick reload and see what's going on there. Novavax, I mean, that is currently trading at its lowest level since June 2020, isn't it? So for me, that still looks pretty weak. I mean, that's massive volatility, isn't it? It was $246 in December, and it's $72 today. I mean, for me, that wouldn't be one for me. That still looks pretty weak to me. So, yeah, I think the risk is that whatever's gone wrong with that looks like it's still going wrong. So it's, yeah, not one for me. Let's come back to it if it stops going down at some point. I'm going to have to, we've only got about 10 minutes left. I have to get a bit of a move on. Aussie yen. Let's have a look at Aussie yen. So Aussie dollar, Japanese yen. I mean, it looks, again, it's a bit sideways, isn't it? I mean, I'd be thinking about being a buyer if it dropped back below 80 much. So it may be an interesting one to watch if it falls below 80. because clearly this 79 level, seen a lot of buyers, a lot of support, I should say, over the last 6 months or so. Platinum and cotton. Cotton is an interesting market. Platinum, I think platinum looks like, I think we've looked at this a few times. I do have an open trade in this account on platinum. And I think the question for platinum is it trying to build a base down here, or has it been trying to build a base down here? Pretty much the same as last week. You know, downtrend, hits a level, rallies, has a good run up, comes back, holds above those old lows. I'd still be a buyer on dips on platinum. I'd only change my mind if it dropped below 890. If it dropped below 890, I think the risk is we're going to see it sell off and move a bit lower. Cotton, I said there, didn't I? Cotton. I've sat there and watched cotton go up, and I've missed buying in. But I mean, look at that trend in cotton. I think I touched on this last year when we were talking about inflation. You know, and I thought, you know, summer of last year, there was no way inflation was going to be short-lived, because if you look at the price of so many raw materials, we've looked at oil, and here's cotton. Look at the price of cotton from March 2020 when it was 50 cents, and here we are at 120. You know, so for me, I'd like to be a buyer. I'd rather be a buyer on dips, but I've had that approach for a while and I've missed out on buying in. So I did trade it in bits last year when it was sort of hugging the trend line, but I've missed out on a lot of these moves since then. But I think, you know, clearly it's a market that's still really strong. I mean, it went absolutely nuts back in 2011. We're currently pretty much at the highest price for, well, 10 and a half years for cotton. I'd rather be a buyer of dips, but there's no arguing with that trend, is it? Aluminium, let's have a look at aluminium. Yeah, we did. I can see a few asking for natural gas and oil. We did natural gas and oil, so you can watch that in the recording. Aluminium, that trend is still up, isn't it? This massive, well, for aluminium, massive sell-off into November, but we've bounced back. So for me, the target, would I buy it now? Perhaps not. The target might be for a run back up to 32.20. Does it break the highs? But again, that trend is still up for aluminium. Where would you put your stop loss buying the S&P today? Well, I'd put it underneath Monday's low. I think that's, so far, that Monday low has been a line in the sand. So if I was really trying to pick a major bottom in the S&P, that's where my stop would go, underneath here. So the other side of 4,200. And people will say, oh, well, the market's at 43.20, that's a 120 point stop. Well, yes, but the market is swinging around at the moment, you know, about 150 points a day. You know, if a market volatility steps up, you need to, I would suggest, you need to give the market room to move around. I think, you know, a big mistake people make is if they, first of all, most people don't use stop losses because it's a very poor approach to trading. The other mistake people make is having stop losses too tight. So here it is, you know, on the hourly chart. There's that Monday low at, oh, it's the Nasdaq I'm looking at now. It's the same difference, but let's have a look on the S&P because I think it is interesting. There's Monday's low from the S&P down here, you know. I suppose an aggressive stop would be, a more aggressive stop, I should say, the other side of the 27th of January low, which was yesterday, at 42.70. But for me, I'd want it the other side of 4,200. So there you go. There you go. Does the unrealized profit or loss add to your margin? I don't think so. I'm not sure, to be honest. Does your margin? I don't think your margin. Does your margin increase because of profit, running profit or loss? Oh, actually, it looks like it does. It looks like my margin is ticking up slightly. So it looks like it does dynamically revalue the position based on the value of the trade. How much further do you think Games Workshop will go? Let's have a look. Games Workshop will go. I think the company is great, not the product particularly, but the way it's run. Still a lot of growth potential. Is that the right one? That is a horrible looking chart, isn't it? I mean, actually, we're looking on the hourly, so let's get a sense of perspective here. There we go. So it was 120. So I'm guessing is that £1.20 a share, isn't it? And now it's 76p a share. I mean, it still looks pretty weak to me. There's a big level coming in at 70. I think if it did start to build a base down here, I think it starts looking interesting ahead of 70. But for now, for me, it's a pretty major sell-off it's been in for the last few months, hasn't it? So I'd rather want to see a bit more strength really before thinking about being a buyer personally. So let's see. Russell 2000, so the US, is it mid cap? We'd call it the Russell 2000, or is it small cap? Small cap, okay, small cap. So, they're really breaking down. I remember looking at this last year and how it had lagged. It was lagging, wasn't it, behind the S&P and the Nasdaq. It did have a run up in November to all-time highs, and that looked pretty bullish. And it's completely turned that on its head by just falling back into the range and breaking lower. So that looks pretty weak to me, the Russell. We've got this new trend going on. We're at the lowest it's been since December 2020. Wow, that's really interesting. That's a US index at a 1 year plus low. So it doesn't look nice, the Russell 2000 at the moment. So for me, I'd be tempted to be a seller on strength rather than trying to find the bottom of that one. Perfect trend line on dollar South African rand. Let's have a look, shall we? Dollar against the rand. Let's have a look. Oh, that's a good trend, isn't it? Do you know what? I think I watch this now and again, and I don't think I've ever traded it, but it was a great trend on the way down, and I presume you're picking up on the trend line down here. Oh, that is. You get the award of textbook trend line of the week. That's absolutely spot on, isn't it? So 3 touches on the way up, comes back down. That looks like a good trade. That means obviously it's going to completely collapse on Monday, but no, I think that looks like exactly the sort of stuff I look for. So you bought with the stop at 14.80. Yeah, for me, because it's beyond these lows here, I think that's a nice trade. So well done. I hope it works out for you. Silver, we looked at silver. We had a look at silver. We did that. Dollar yen, someone's asked, let's have a look at dollar yen. I thought dollar yen was a buy this week, but I wonder if I've missed it. Let's have a look. Probably. So dollar yen, nice trend on dollar yen. I'd rather buy a dip again though. A bit like the dollar index, isn't it? I'd rather buy a dip in dollar yen. We've got good support down at 112.40. So if we did see, next week a little bit of this, just a bit of cooling off of this dollar strength that we've seen over the last week, I think it could be an opportunity for dollar yen. Stop loss on oil and gas. I just moved my stop losses up. We'll have to talk. It's a whole other topic. Go to my website to find out a bit more about my approach on that. It's a whole other topic about when you move stop losses. I think the key is not to move them too early. So for me, if my stop loss is 100 points away, the market has to move at least 100 points in my favour before I consider moving the stop. But it's a big topic, that stop losses. Nvidia has been absolutely clobbered, isn't it, the last few months. The trend is still up though. So Nvidia, there's our big trend on Nvidia off the March lows. So I would be looking to be a buyer, not yet maybe, but looking to see this whole $180 to $200 area on Nvidia and see if it holds, because the big trend is still up. Microsoft after Activision Blizzard buyout. Microsoft. I'd be a buyer of Microsoft. There you go. The big trend is still up on Microsoft. Of course, if the Nasdaq suddenly drops another 10% in February, all of this is going to change. But the trend is still up. It's had, I wonder if that's dodgy data. Maybe not. It's had a couple of goes at 280. So I'd be a buyer with a stop at 260, maybe, on Microsoft. We did oil. Someone's asking about oil again. We did oil. You can watch it in the recording. But clearly the trend in oil is still up. Square. I don't think we cover Square. We've got Squarespace. That's not Square though, is it? Squarespace is Squarespace. Don't cover Square. Apple. Earnings last night in Apple, I think, wasn't it? And again, I think did they beat expectations? But again, we still have even though the Nasdaq is getting absolutely hammered this month, we still look at that perfect trend in Apple. So the big trend in Apple is still up. If I was a buyer of Apple, I'd put my stop loss the absolute closest, the other side of 150 in Apple. And I think that's it. I'm going to wrap things up there now because I'm running a bit out of steam, to be honest. So as usual, I'm sorry if I didn't get to your question. I did try and cover hopefully as many as I could. But if you have to open an account and all of that stuff, go to Capital.com. Any questions after this, drop me an email, david.jones@Capital.com. You can follow me on Twitter @JonesTheMarkets, JonesTheMarkets.com to see the trading course I run. Follow Capital.com on YouTube, Twitter and Facebook. And that's it. And like I say, interesting markets to watch. For me at the moment, it is stock markets. And it's all about, can the Monday low hold on the S&P and the Nasdaq? It's holding so far, so we'll see. We'll see how it goes. But we'll wrap things up there. Thanks for coming along. Always enjoy doing them. Interesting week, crazy markets, really important to manage your risk. I dread to think how many people have blown up trading accounts in the last month. So if you're still here and you're still trading, I think you'll be ahead of an awful lot of people, because it has been, for me, it's been a really, really tough month for my normal trading approach, with these markets moving so quickly and switching direction really quickly. So hopefully, let's see if we get a bit more clarity going into Feb. We'll do it all again next week. And next week is the payrolls. So it'll be another pretty volatile session on Friday. So we'll do it all then. Thanks for coming along, and good luck with your trading over the next week, and we'll do it all again then.